Hi, welcome to today's morning report on Monday, the 6th of July, with me, Rich Perry, market analyst at Handtech Markets. So Greece voted no, and in the referendum, and volatility did increase quite significantly on the back of that. But the selling pressure that we did have has not really massively come through. Very interesting, actually, because I'm just watching it all unfold last night as the markets opened back after the weekend. And equity market futures were expected to be sharply down, and yeah, there was selling pressure in Asian markets, but the DAX was sort of being said to be opening around 10,600. Well, didn't ever on this morning when it did open, it hasn't broken below 10,800, and it's now over 10,900 again. So the selling pressure has not really come through, interestingly enough. Also, the selling pressure on the euro hasn't really come through either. We're back above that key pivot level I have been talking about at 10,000. Sorry, at 1.1050 again. So very interesting moves that we've seen today. The safe haven trades that look to be coming through the market have not really happened, and the main move has been this the bond yield spreads. They have widened, of course they've widened, and the Spanish yields are higher, for example, in the peripheral, and also the German yields are lower. That has driven the yield spread. Let me show you that yield spread higher. That yield spread has gone higher, but not massively, I would say. And interestingly enough, that it looks like this move currently is fairly reasonably contained. Now the dollar has strengthened, but again not significantly. So that is also interesting. Interesting that other safe haven trades such as the gold price and also the yen, initial strength, but again unwinding those moves. So these it looks to be at the moment that the whole selling pressure and the whole sort of contagion aspect is being rather well contained at the moment, and markets are fairly yes, volatility has been increased overnight, but they're sort of coping with this reasonably well at the moment. Now today we've got the ISM non-manufacturing index, non-manufacturing PMI, which which was sort of delayed obviously by Friday because it was US was on public holiday, and it's due to come out at 3 o'clock this afternoon and be a slight increase and improvement from 55.7 to 56.2 today. So that could also help to support the dollar, but that's the only real bit of data we've got to look out for today as the markets sort of try to settle down following on from obviously the volatility overnight. Now my chart of the day is I decided to have a look at euro sterling, because obviously the euro has been in focus over the weekend, and I decided to see how the reaction had come against sterling, because what we've actually seen in the last few months really is euro sterling broadly moving sideways, sort of holding above that 0.7 big figure level. And you look at these indicators, yes, the longer term outlook is still pretty negative. It's still trading underneath that 144-day moving average, and the moving averages are tending to slide away. So there is a slight downside pressure that continues to sort of be a drag on euro sterling, but nothing too significant over the last few months. You'd say that these momentum indicators are fairly well range bound actually. RSI continuing to sort of find support around or pick up around the mid-30s. And it's now around 40, mid-40s level. And not only that, we had the initial weakness today, but that's rebounded, and euro sterling is currently only slightly lower on the day, which is interesting. You've got this intraday hourly chart here, where, sorry, that's a wrong button. Intraday hourly chart whereby you've had this gap lower at the open, but now you've recovered and you continue to recover all this move. You'd say that the hourly chart is not really excessively negative on the momentum either. You'd say it's pretty much range bound still, even on the near term outlook. So you've got medium term and near term outlook all rather neutral on this euro sterling. So the fact that it's coped with this initial selling pressure and unwound, it hasn't quite. I mean, if you're going to get textbook on me, then the gap is from sort of Friday's close, which was 71.36, hasn't filled that gap yet, so perhaps there is still more movement. But I think that if you to see a close above 71, say 71.40 being Friday's high, that would obviously be a pretty bullish move, actually, considering the downside pressure that it potentially could have come under. So I think that this reaction on euro at the moment is pretty positive, and you've got the low that comes in at 70.50. You've left that low now. It sort of rallied off that, and even left a higher low intraday at 70.72. So you've got a couple of levels are there to the downside, but certainly these momentum indicators are pretty much range bound still on the euro sterling, and it's certainly not showing any real selling pressure coming through yet. So very interesting moves on euro sterling today, and I wish you good luck in your trading throughout the day. Lots of volatility, but makes it interesting. So I wish you good luck, and I'll speak to you later. Thank you.